Okay, welcome MegaWhale team to another video. Today we'll be talking about DYDX. Now DYDX has seen a pretty significant drop since the start of October. It's dropped down from about $29 all the way down to a low of around, I think, $7 or $7.50. It's bounced ever up to about $8.80 now. DYDX, I don't know too much about it fundamentally, but looking at the chart, it looks incredibly bullish. Before we get started today, make sure to drop a like, subscribe, comment below which coin you would like to see next. We're going to do Zookeeper, the one-chain Zoo token analysis next. But drop a comment below which one you would like to see after that. And with that being said, we'll get straight into the video. So we're looking at the daily chart, and what we can see is this huge descending channel. So we'll draw it in. We've got this. There we go, resistance and support, this huge descending channel, and we're being kind of like trending in this channel for a pretty extended period of time now. It's been, what, since the start of September, or end of September, October, November, December. It's 3 and a bit months essentially. And you know, these longer consolidation periods generally lead to more aggressive upswings. Now this is a bullish pattern. This descending channel is a bullish pattern, so it will eventually lead to a break upwards. The question is, are we going to break now, or are we going to swing low again, maybe come down to around $4 range, bottom out, go sideways, and head up? First, we're going to answer that question today, but first what we'll do, we'll put in our, where is it? There we go, our support zone. So at the moment, we have our strong support of around $8.20. This is a pretty critical support, and we can see we've kind of held onto that and more recently bounced around on that the last few days, and that actually propelled us up about 10% to retest that, or test that $9 range. We had a small break. That was a few hours ago, so nothing conclusive yet. Of course, this daily candle still has 15 hours left. It can well easily push over, but we are looking for a daily candle to close above this range. We can see we haven't had a daily candle, a lot of wicks, but not a single daily close above. The first test will be to close above this range, above that $9 resistance. As you can see, this support resistance zone, that $9 resistance lines up perfectly with that descending resistance line. So it's gonna be a tough one to break over. But if we do manage to get over it, it's gonna flip and turn into a pretty strong support, which is gonna build a great base for us to continue upwards. Another notable thing is this 50 SMA. We do need to cross over that to be bullish. That is converging downwards, so the next resistance zone will be close to around $10. Let's break it down onto a 12-hour chart and see where we can see any differences. We can see again, it really reinforces what we just said there. We had this huge descending channel, and we've seen numerous amounts of bounces on these descending channels. You know, descending channel break, bounce, resistance, a lot of resistance up here, resistance again, and now we're kind of tapering and converging sideways with a slight uptrend. So macro wise, we are still in a downtrend. Obviously a descending channel is a downtrend, but you can see we're converging upwards, and we're holding on to that $8.20 support, as well as this slight uptrend that we formed ever since 20th of December. And just to reinforce what we said before, we need to break that $9 range for us to swing upwards and head up and make some new highs. I'm expecting a very strong move for DYDX. I will say anywhere between $16 to $28 would be a reasonable move. I posted in my VIP. We'll use this one as a free trade as well, but our entry point would be anywhere between $8.40 and $9. We'll put it at $9 for the sake of the video. At $28 is our target, and then obviously our stop loss is going to be below our support zone, so around a little bit less than $7. Now, 23% loss is a huge loss for one singular trade. So the risk reward ratio is still 1 to 9.1, which is pretty significant. It's a really good trade. Now, we did a video before about how to use the risk reward ratio and how to take in consideration your total percentage loss in deciding how much money you should invest. Now, if you put 100% of your portfolio into something and it dropped 23%, that's pretty, that's pretty terrific. Pretty horrific, should I say, and it'd probably set you back a while. But if you put 10% of your portfolio in and it dropped 20%, you lose 2%, which is pretty insignificant. So this is what we're trying to say. You put 10% in, it goes up 3x, you make 30% of your whole network, your portfolio value, or you lose 2%. So it's all about perspective. It's all about how much money you put in. If the risk reward ratio is favorable, which this one is, the trade is definitely a potentially positive trade. So on this trade, we're making a significant amount more than you could potentially lose if it went south. So let's take a look at the technicals. We've talked a lot about the chart overall, and obviously it's a bullish chart. Obviously we expect to break upwards, and you know, DYDX has had its time time to shine, and it's been in the spotlight, but it's been kind of like low key, like not talked about a fair bit. Ever since we kind of started dropping around our $16 range, it kind of just died off and people stopped talking about it. But you know, like I say, in crypto, everything comes in cycles. Coins will be hot for a few days, few weeks, few months, and then they won't be. And then, you know, they'll come back in the spotlight eventually. It's just a matter of patience and time. And obviously, if it's a good coin and it's got a solid, you know, plan and roadmap and team, which DYDX, from what I know, does, you know, no doubtably it will have its time to shine. The real question is, will Bitcoin suppress its ability to rise, or will it allow it? Because obviously the market relies on Bitcoin. If Bitcoin crashes, well, obviously this scenario is not going to play out and we'll probably head down, retesting somewhere down into this lower $6 range. But if Bitcoin does move up here, we can definitely expect a huge rally for DYDX. All right, let's bring up our MACD. Let's bring up our RSI. Let's dive right into some of these technicals. We're going to switch back to a one-day chart to start with. You can see on the one-day chart, guys, we're having a bit of convergence, and we are kind of like making a rounded bottom here on the RSI, which is a really good sign. We would like to see a push up into this overbought territory again. It looks like it's making that way. If we look at the MACD, we are converging upwards, and we had a pretty big burst of buying volume today. Coincidentally, when Bitcoin seems like it hit that bottom of that support range. So it very well could be the bottom for DYDX. We look on the 2-day chart, similar thing. Again, not a lot of chart data. We don't have a lot. We've got a few months at most. So it's hard to give you too much information with only like 4 months of data. But you can see we are converging upwards. We are moving. Volume is now positive, and the price hasn't caught up to that yet. So we are moving slowly up in price, but I'm expecting if this volume continues, especially past that $9 range, we will swing to the upside and we'll reverse. And it's going to be very, very profitable, this one. So I'm looking closer in DYDX. I've been looking at it ever since around $16. I've just been waiting, and I think that $9 break around that $9 range is a great entry. It's an entry that I'm probably going to be jumping into. I think the upside on this one is unreal, and you don't always have to be investing a lot, you know, like you don't have to be investing half your net worth into a trade. Like what people seem to forget in crypto is full of opportunity and potential. It's not like you being away for a day, you're going to miss out on your $1 million trade. Take your time. There's no rush. There's always trades. Every day there's a new possibility. Every day there's a new chance to make money. If you miss one day out, it doesn't matter. Take your time, relax. Don't FOMO into the market. That's how you lose money. So we're being patient. We're being waiting for DYDX to get into a nice entry. We're in this support resistance zone, which is a great place to be. And we're converging with the bottoming out. We break that $9 range. That's a green light to me, and I'll be jumping in. Let's take a look at some more stuff. Let's take a look at our Ichimoku cloud again. Ichimoku cloud's not going to tell us too much because, again, we don't have a lot of chart data, but we can see even on the 3-day, that conversion line, guys, that's coming down. That's $9.15. We have not closed above that conversion line since, well, basically forever, because there's no data down here. So if we flip that conversion line, $9.15, that would be a very, very bullish entry. So like I said, that $9 range, look at this, $9.15, the $9 range, huge potential in this one if we do flip that. Breaking down to the small time frames, again, we are being suppressed. We can see we've kind of been suppressed by the cloud the entire way down. Let's try to see that lagging span. I can't quite see it. The green doesn't really pop. I'm gonna change it to black. All right, the lagging span, where is it? It's over here, still under the clouds. We did break the conversion line on that 12 hours, so it does look like we're getting some upwards movement because of that. If we drop down to 4 hours, we might be able to see a bit more. All right, so 4 hours again, we're getting rejected. We are over the EMAs of 50 and the 200, which is really good to see. A bounce over here would be great. Again, there's a lot of movement room. We can come back down and still move back up, so I'm not too worried about it. Overall, the chart looks really good. I'm happy with it. I think wait for that $9 entry, and we could definitely expect to see a very strong move up. It obviously will take time, but we'll see an initial spike, maybe a retest, and then a continuation upwards. And that will be our bearish scenario. Obviously, our bullish scenario would be we fail to break up, we get rejected, we come on down here, we fail to hold it, we get rejected again, and then we probably a sharp crash and end up down in this zone here around $6 to $5.50. Again, consolidating sideways in the bear market before we move back up again. If that happens, that $7 mark will now become the strong resistance, and we'd have to break above that $7 mark for us to see any kind of upside potential. Alright guys, short and sharp video today. I hope you enjoyed it. If you got any questions, make sure to leave them below. I'd love to hear you guys' feedback. Again, if you want to request a video to be done, post it down below. I'm happy to take suggestions. Follow us on Twitter, links in the description. Telegram channel, the link is in the description. We post all these trades and more in there. And if you have any questions, of course, you know where to find me. See you for the next video.